Welcome back to the sixth episode of the Ben and Al Show. I'm your host, Albert. I'm joined today with my co-host,
Actual host.
Mr. Yeah, Mr. Ben. And today we have a guest for you guys. We'll reveal him in a bit. First of all, let's kind of discuss a little bit of some events that are going on in the market. So we had some data today. Today is the day of the recording is the 10th of December. It is Friday. So we had some CPI numbers. They came in basically in line as most expected, and I think a lot of people were thinking we would get pretty hot numbers. So we saw a little bit of a relief in some of the names that were um, kind of down into the end of the week. And as of now, we're just gonna. It looks like people are just waiting for Fed really, Fed on Wednesday. So whatever the Fed says, that's gonna be a pretty big impact, in my opinion, on what is gonna happen into January and if we will see higher in the markets, especially in the growth names, because that's really where everyone is watching, to see if there's some relief there.
Yeah, the CPI numbers, I kind of think they weren't good, they weren't bad. But I
Yeah,
think most people were expecting, like you said, a lot worse. So I think
yeah,
really what we got was kind of priced in, which is why we didn't see too much reaction up. What we did see though was another rejection of that 470. And that could linger over into next week, right? While we await FOMC, and we also have quad witching next week as well. So we do have some things stacked up that we're kind of, I think the market's really waiting on before we progress further. But
yeah.
overall, I think as long as everything's handled correctly, I think if we get that break over 470, we could probably actually see some forward progression. But right now, it's just a little bit too much uncertainty, which is why we're seeing so much rejection.
Yeah, the witches are coming out on Friday.
Yeah, the witches.
The
Last one of
witches
the
are coming out.
year. Last one of the year.
Yep, so probably we'll see a little bit more excitement into the end of that week. Also, we obviously have the holiday season coming up with Christmas and some other holidays as well. So a lot to watch for into the next year. I am definitely excited to see what will happen and obviously some trades and some setups that can kind of marinate and consolidate themselves into, I guess, fruition, I'd say.
Absolutely. And I think we have a guest that would like to talk about some of this as well. So I'm sure most of you know him. It's Squeezy. So we're going to bring Squeezy on now to talk about some important subjects going on in the market.
What's up, everyone? It's Squeezy. Thanks to Ben and Al for having me on the show. A little background about myself. I've been trading for now 7 years, options trading for four. And I've been on Twitter for almost 2 years now. My goal with my Twitter is just spreading knowledge and really learning from my mistakes and trying to help everyone else's learning curve flatten a little bit. So I appreciate you guys for having me on, and I'll try to keep it together and be serious with you two for once during this podcast. So thanks, guys.
Thanks for coming on, buddy. I have a very, very important question to start us off, and I think most of the people listening to this podcast want to know this specific question. Um, why Squeezy? What does a lemon have to do with option trading? Please tell me.
Um, that's a great question, Albert. I know you thought about a long time about that. Um, and honestly, uh, that comes from the famous TTM squeeze or Bollinger Band squeeze. I don't know how much you guys use that, but when I first started options trading, that was one of my favorite indicators to use, and I had a lot of success with that. I know a few other traders that like it a lot as well. And then I took the Bollinger Band squeeze and made the name Squeezy out of it. And then I forget who it was. Someone on Twitter started calling me a lemon, and I forget when that was. And then that kind of turned into me using the lemon all the time, and that's kind of my go-to now.
I remember that actually. Um, I don't remember who it was though, but it was the weird GIF with the guy with like the lemon in his mouth. You know what I'm talking about?
Yeah, yeah.
Yeah,
It's weird how stuff on Twitter starts like that.
yeah. So you use the Bollinger Band squeeze. Did you want to talk about any other indicators that you've always used or that you've recently discovered or strategies that have been successful for you in the past in the
Yeah, I
gym?
keep it really simple. Besides that one, I use your standard EMAs 821, 50, 200. And then I use volume profile probably the most. And I use volume profile mostly to find heavier levels of support and resistance, supply and demand zones. And that's the basis of my trading. That's where I start. And then obviously, if you ask a lot of traders on Twitter, what indicators do you use? A lot of people will say price action. And then everyone's like, what the hell does that mean? And for me, I trade mainly off of price action, which is just learning how price moves throughout the day, especially if you watch a specific ticker day after day or SPY. You get to understand price action a lot better. And I think my main three things that I use price action, volume profile, and EMAs. And then I'll throw in some of the Bollinger Band squeeze I talked about already. But I try to keep it simple. I think if you throw too many indicators on your chart, you end up getting confused and miss your trade.
Yeah, I
Yeah.
agree with that. I'm always about keeping a clean chart, but the volume profile, I developed that from you. It definitely helps find supply and demand zones so much easier. You can see like the areas of accumulation. And I think that's probably one of my favorite indicators that you can use on many time frames, right? You can use them on the monthly, the weekly, even the micro time frames to see the day
Right.
trade supply and
And
demand areas.
it like helps you plan too. Like when you're creating your watch list, I think that's when I use it the most. I don't use it as much intraday, but when I'm charting out my watch list for the day or the week, I use it the most to kind of get an idea of where I want to enter or exit.
Right. I
Um,
think the daily is probably the most useful of
for sure.
all the time frames for sure.
Yeah, so Squeezy, you were kind of talking about how on Twitter you like to talk about psychology and the aspects that kind of go behind the mental part of trading. I've had a lot of people in the last month from this kind of drawdown that we had, choppier market, kind of come to me and ask what I did during these times when I was kind of trading a year ago when we had pullbacks and whatnot. What would you tell people that are kind of slumped during pullbacks and are kind of struggling with the mental aspect of their trading? Because that's what most people that I've kind of talked to right now are struggling. At least people that are kind of new to the markets and don't really have the experience.
Yeah, it's a good question. So one thing that I've said, and I've said this for a while too, is that you have to protect yourself in times like this where there's chop to survive and get to those euphoric times when the market's bullish and roaring. And that's when we profit and we rake in all of our profits then. And during these times, you could just your main priority is protecting your account, trading smart, especially if you're not confident in the price action. For me, I took a little break recently. I was gone for like over a month, almost 2 months. And when I came back, I felt like my trading was different. Like, not even from a perspective of like the market being different, but just my mental ability to trade, like, and get in the trading zone and have the confidence to pull the trigger was a little off. And I think people need to understand, I think they see it all the time on Twitter. People always are saying the mental part of the game is so important, but they probably think that's just like super cliche and people are just saying that. It's true. Like, that is what holds you back when you're trading the most. You need to be able to feel comfortable to pull the trigger when you've planned out a trade. And like I said before, when the market is choppy, like right now, you still see people raking in, 100%, 200% trades. Well, that's because they've been doing this for a while and they're confident in themselves. But if you're just starting out and you're in a little bit of a slump right now, I think you need to scale it back a little bit, and just make sure that you're protecting your capital, because we do go through cycles in the market. And when we have a chop cycle, you don't want to blow up your account forcing a trade because you think it's similar to when we were roaring and booming before. So I think the most important thing for someone who's struggling mentally like that is to take a step back, keep your trades smaller, and don't be afraid to take profit quickly. I think compounding your gains in this type of market is way more important than trying to rip out those 100%, 200% trades right now. Not worth it. So just build it up and protect your capital in a choppy market like this.
Yeah, because me and Albert, I know both completely agree on that. Actually, the last episode we talked about the cycles of the market and how, we got to drawdowns and sellouts and whatever the case may be. We go through those cycles where you can't hardly do, especially when it comes to option trading. It makes it very hard to be able to navigate the market, and that's when you really got to adjust your style to what's being laid out in front of you, rather than living, what we had earlier this year, which was, a parabolic bull run. So when I think a lot of people are still trying to play that type of price action, they'll see, well, one green candle on the indexes, and they're like, oh, we're back, baby. Come on, let's go ahead and swing the whole stock market. And then, the next day they get absolutely clapped because it's, there's another red day. So I definitely think that is a very, especially you touched on the cliche tweets that that we see. Yeah, they're cliche, but there's truth behind them. I think a lot of people overlook those psychological tweets that may seem cringy or whatever, but there's definitely some meaning behind them. I think a lot of people need to take a step back, especially right now, while the market's still deciding, where it can go and what it can do.
Right.
Yeah. Best traders I know, at least personally, they all have one thing in common, it seems like to me. They just know how to size and when to size, because that's probably one of the most important things. If you're protecting, like you said, your capital, and you know exactly when to turn on uh or turn on the gas, right? And really kind of go for it when market is cooperating with whatever trading style you have. You're able to make good money during that period. And then obviously when we have drawdowns or whatever it is that kind of inhibits you from trading at your best, you want to always just size down right away, protect your capital, and then be able to deploy it again when you have suitable conditions for whatever your style is.
Right. And I think one more thing to put onto that is if you think about sizing up and seeing, I think FinTwit's like a double-edged sword. It's hard to tell, it's hard to see someone else making 100, 200% on a trade. And then you look at your account and you're like, wow, I made like 5% today, or I'm red today. And then you think that you're doing something wrong. But everyone trades differently. Everyone has a different strategy. And what works for somebody that day doesn't have to work for you. That's what I realized a long time ago, is if I see, like, let's say Albert is, has 380 to 100% trades in a day, and I'm over here like just scalping, barely making 10% on a trade. I'm okay with that because I did what works best for me that day. And then the best part about the market is that we have a brand new day the next day and you come back in ready to go. But I think FinTwit sometimes, as helpful as it is with all the education and stuff on there, it's also really hard for people to see those types of gains and those types of plays and then look at their account like, what am I doing wrong? And the answer is you're probably not doing anything wrong if you're trading your own style. You don't have to trade Albert's style or Ben's style or my style. you trade your own style, and you're going to have your good days and your bad days, but as long as you're consistent and it works for you, um, that's what's most important.
Yeah, I 100% agree with that. So Squeezy, you have, if I'm not getting this wrong, you trade and you also have a full-time job, right?
Hmm. Yep.
And a
Okay,
baby.
so and a
And a
baby.
baby.
So you have a lot going on, especially while trying to trade. I would absolutely lose my mind. I don't know how you do it. So obviously props on that. But I have a lot of people actually also message me on Twitter, on Discord, and they ask me how to kind of balance out whether it be school, some people obviously in college or maybe even high school if they're starting out young, or they have a full-time job, or like you, a job and kids and maybe a dog, I don't know, have responsibilities outside of just trading and they're not really able to put all their time into it. What is kind of the one thing or a couple things that helped you really be able to stay on top of trading and make some money on the side?
Yeah, I think you need to adjust your expectations and your trading style to everything else you have going on in your life. So when COVID had first hit, and everyone started working from home, that presented me a lot more time to trade throughout the day. So for me, it really depends on the plan you have set in place for yourself and everything you have going on. If you have a full time job and a family, and like you said, a dog,
Yep. Or a
or
goldfish.
or a goldfish or anything like that, or a guinea
A
pig,
pet rock.
yeah, or a rock or a snake or something. Um, you know, you have to be able to adapt. And I think the problem is people are trying to trade too much. If they have a lot going on outside of trading, that's the worst thing you can do. You need to know how much time you have available, and you need to be 100% mentally there. Before we were in a swing trading market where you could just, buy dips and, swing plays for multiple days or weeks at a time. And that was a great strategy for people that were working because you didn't have to sit and stare at the screen every day. Um, but when we're constantly day trading like right now, I think the most important thing is just planning out your day ahead of time. So like for me, I have a lot of mornings available, which is perfect because I trade mostly from like 9:30 until 11 Eastern time. And so I try to keep my work schedule free at that point, and schedule my meetings for the afternoon. And that way I know I'm going to have time in the morning to trade. Um, and I plan around that. So I think the hardest thing is like, you go from having a bunch of time to trade, where you see people that are trading all day and you want to do that. And so you start forcing trades and rushing trades. That's the last thing you want to do. It's better to take like one or two good trades a day and call it a day. Um, and then just move on to whatever else you have going on in your life. Then sit there and try to force like a trade here and there when you have a 5 minute break or a 10 minute break. That's a bad idea. Whether you're in college, studying for exams between classes, or you're working full time, it's really stupid to come out of a meeting when you were like in the middle of a work conversation and then say, hey, I can just pick it up and trade this stock really quick, make, 20%, 30%, and then boom, I'm back to work. You're probably gonna get your ass kicked at that point because you're not paying attention. You're not even planning anything out. You're just trying to trade in between meetings. So for me, I plan my day out ahead of time and know how much time I'm going to have to trade and when I'm going to trade, and make sure I can be mentally there when I am trading and not thinking about work or, thinking about taking care of your kid or doing something else.
Yeah.
Um, so I think this is the planning part that goes into it for me.
Yeah, it's very big. Also, a common misconception is that traders that do this for a living, like myself and Ben, that we sit on the screens all day
Hmm.
and trade every
That's
single day and trade
so
Not
all
false.
at all.
day.
So
That is
false.
not true. So if you have a job and or other responsibilities and you think they're kind of getting held back by that, one thing I always try to tell people is that I'm not trading all the time. I'm not trading every single day, only when the opportunities present themselves. So yes, it can obviously be liberating. You can have freedom with it, but you don't have to think of it as such a big roadblock in your trading game. Um, you can still have some opportunities to make trades, and you don't have to sit there all day looking for trades or doing all that. It's all preparation and planning, like Squeezy said.
I think that flows over into more than just trading. I think you know structure and planning behind anything that you do will obviously make you more successful at it. So I think that's it. Just if it flows into trading as well, but pretty much everything in your life, if you have structure and planning behind it, it usually tends to work out better. But also, Squeezy, I have one more thing for you. So, you know, with the recollection of the bull market earlier this year, and you know, we'll see one of again eventually, right? Whether it's now or next year or whenever, whenever that cycle comes back around. Um, when you're in a bull market as such, what sectors are you looking at to really um, you know, maximize your gains for whether it be volatility, price action? You just like how certain tickers move within those sectors. Is there certain tickers that you look at or certain sectors that you're focused on when we're getting that crazy volatility throughout the whole market?
Yeah, obviously, during this bull market, tech was hot,
Right,
and it had been hot the entire year, and everyone was playing tech. I mean, you look at the watch list on Twitter, it's all tech names,
right.
and I like how you guys kind of mix it up with tickers. That's kind of what I try to do. I look at the market as a whole. I'm not looking at just tech, but I also look at high beta names. Um, you know, names. I have a list of tickers in each sector with high beta, so they move, you know, the most when that sector is moving. Um, and what I do then is I kind of take a look. I know Ben, you do this too. I'm not sure, Albert, if you do this, but I look at the sector ETFs like all the time. Just constantly looking at any setups I see on those. And then I'll look over at the list of tickers and see, you know, the ones that move the most or have moved the most for me in the past when that sector is hot. And that's what I watch for the entire day. Um, you know, I try to keep it focused to a select number of tickers for me each day, um, with good setups. And I think, like you alluded to, Ben, when the market's hot, I mean, it really depends which sector is hot. Um, you know, they rotate still, even in a bull market. But for me, tech was so hot this year, earlier in the year. And like Albert can attest to this, you know, you said you made a lot off of Neo. Um,
Yeah.
you know, I've played mostly tech through the bull market, and then I kept an eye on sectors that were rotating and sectors that were hot at the time. Um, like you know, for example, with COVID, we get that whole rotation all the time where it's like travel's hot.
Yeah.
Um, like travel just got hot again, and I saw
Industrials.
that. Yeah, that was beautiful. And then like when COVID's the scare comes back, you see your Moderna and your Pfizer um, have great days, your NVAX, and then sometimes you'll see your COVID stocks, which haven't moved as much lately because tech got crushed. But back earlier in the year or last year when COVID scare would come back, we would see, um, you know, your Pitons move, your Roku move, Netflix, anything that had to, or Zoom, you know, anything that had to do with that. So I was constantly just kind of reevaluating where the news is at and where the market's at. But yeah, tech was my main sector I was watching.
Yeah, I think market is all about like trends. We're always seeing new trends in new sectors as well. Like not only just specific stocks, obviously can trend, but we have different sectors and we have money flowing out of a certain sector going into another and strengthen one area and out the other. So I think that's a big topic that a lot of people don't really touch on. I don't really see much people talk about finding different sectors that are strong. I mean, it's pretty rare. I've seen a couple. But if you can really learn how to find the sectors that are hot and also the correlation between the sectors. So what I mean by that is, let's say we have some economic data come out, we have bad unemployment numbers, right? Um, you're probably going to see tech stocks and growth stocks do better than industrials, right? Because industrials are more kind of value names with obviously labor and whatnot, more manual labor and stuff like that. So money is probably going to flow out of there. That's usually just kind of algos picking that up, and it's going to go into tech. And we actually saw that just a bit ago, pretty recently, right? I think it was like on Friday when we had numbers,
Yeah.
and we had a pretty big rotation there. And now we're kind of seeing tech pop back up again. We had industrials Monday strong, now we have tech strong, and we're seeing money go out of industrials and retail and some of the safer names. So it's always a kind of nonstop cycle of money flowing in different places. Obviously, funds continue to rebalance their sheets, and money has to flow somewhere. They have to have money somewhere. So you can always find those areas, whether it be scanning sectors or having a list of just individual stocks and seeing what sectors they're in and which ones are green on the day, which ones are red, and you can kind of understand the correlation between all the sectors and how price is or how money is flowing through all the different sectors.
Yeah, that's a good point. And I think one of the best sector traders I've ever seen is she's actually who got me into a lot of the sector ETFs was Miss Izzy on
Oh
Twitter.
yeah, I love Izzy.
She is super, super good at like um analyzing the sectors and catching that rotation very early. And then she plans her watch list around that. And that's kind of what inspired me to dig more into that. Because if you plan that and you give yourself a plan that day, it's so much easier than just like hopping around trying to find the hot sector during the day. Um, you know, I know like consumer discretionary was super, super hot in like October and November. She's who kind of inspired me to dig further into that. But like you said, Albert, there's not a lot of talk on that. Like you just see people posting the hot stocks during the day, but you never see the planning and you never see what goes on the back end.
Yeah,
So that's a good point.
yeah, a lot of planning. And a lot of people ask how we find, I mean, most of us at least, how we find the charts that we post because most of us are just posting a bunch of charts. People are wondering how we find some of the names that we are posting and the setups that we are posting. So good, a good kind of answer there is scan through the sectors, see what is strong, and then go into Google and type up XLE, for example, and see some oil and energy names that are setting up. So that's an easy way to kind of get an idea of what might be moving during a certain month or a certain week. And then obviously familiarize yourself with different stocks because that's kind of the best way, in my opinion, to have a consistent watch list every day or every week, whatever time frame you are kind of trying to trade on. Just have an idea of the stocks that you like to trade, have all those down, and then just scan through them. Do multiple scans a week and see if anything is setting up there. That's at least how I do most of my finding on my watch list and whatnot. So that would be how I do it. What about you, Ben?
Yeah, I'm the
I think
same way. I always,
similar. Yeah.
yeah, we do this every morning. We kind of see where money's flowing, and that kind of helps us set up our weekly watch list or our daily watch list. You can set up what you're watching throughout the week, but obviously you're going to want to touch on it every day because money moves differently with every day that passes. So I think it's important to touch on your watch list every day. If you have a weekly watch list, you move things in and out, things that get negated or overextended over time. And obviously, you don't want to put your money into something that's going to come to a screeching halt very soon. So I think it's important to always continue to plan. Even if you plan ahead, you can continue to critique your plan as well, which is something that I always do. But yeah, sector rotation definitely needs to be touched on by more. And I think a lot of people that are just getting into trading probably don't know anything about sector rotation, or very, very, very little. So I think that's a topic that that really, really needs to be studied up on, especially if you want to do this, full time in the future. You're going to really want to know how the sectors work and, what's involved in those sectors, their biggest holdings and whatnot. So
Yeah. All right. To wrap us off, Squeezy, give us say 3 sectors that you're watching into the end of the year and into 2022.
3 sectors I'm watching. That's a good one.
that is a good one.
So for me, yeah, I didn't even prepare for this, so thanks, Albert.
I didn't either. I'm trying to think of my 3 because I know he's going to ask me.
You asshole. Yeah. Okay, thank you very much. Well, first I want to put a plug in here for that travel call out I had this week. No big deal or anything.
Shameless plug.
Yeah. Well, I mean, I might as well because I could just be posting my max gains over and over again. But I think for me right now, I reevaluate that every single week. But what I'm looking at into the end of the year are the names that, especially tech, that got absolutely, or growth tech, that got absolutely obliterated. I'm looking at names that were beaten down the last 2 weeks. I know this is a
Yep.
weird exception like Roku, but I'm
No,
not
yeah.
going to sit here and rush into that.
You actually stole my answer. That's exactly what I was gonna say, or what I was watching.
That's okay. But yeah, I can't tell you for the rest of the year, but what I can tell you is growth and all of the names that were beaten down and the ones that looked like they were going to fall to like
infinity and beyond.
Yeah, exactly. Like Roku was down like 65% from its high in August. And it was just breaking demand zone after demand zone after demand zone. And everyone on Twitter was saying it's going to 50. And for me, now is the time to watch it because it pulled back with a 20% move, which is insane. I think it just renewed its contract with Google for YouTube.
Yeah.
So that one's taking a bullish turn. And then names like Albert likes what is it, Skills,
Snapchat.
Albert?
Oh, Skills. Let's not talk about Skills. Let's not
You had
talk
to
about
bring it
Skills.
up. You had to bring it up.
Snapchat. What else do I like? I like
PayPal.
Snapchat. Fubo bounced back, man.
Yeah,
Albert
Fubo.
likes Square and PayPal. He loves fintech companies.
PayPal.
He loves fintech companies. Absolutely loves them.
Did PayPal do
I
well
don't,
today?
but
PayPal did do
PayPal
well.
did well.
Did
I think
amazing.
I think some of those names are very extended. I think that's the only place that really makes sense to watch right now as we kind of keep putting in new highs on the indices or get close to, at least it looks like, on the Qs and SPY into next year. But we'll have to see how this develops. Obviously you don't want to rush into anything and try to catch knives and go against a trend. But I've talked about trends and how to spot changes all the time, even on this podcast. So some of you should already have an idea. We're just looking for big basis to form, consolidation, and then the trend will tell you when it wants to change. So don't try to hop into anything too early, but just watch, like Squeezy said, see how stuff develops, and you'll know when to enter. I feel like everyone understands kind of the idea of um, looking for something to kind of base out, form something constructive, and then you'll kind of get the instinct to look to jump in. Thank you, Squeezy, for coming on the show and being our second guest. It was a pleasure having you on. Is there anything you want to leave us off on?
Yeah, I would appreciate if you like fast on this post. 500 unlocks another episode.
Thank you, Squeezy, for coming on. I really appreciate it.
No problem, man.
Everybody like and subscribe, like Squeezy said. See you next time.